Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. Starting to see more investors using AI tools to try and source finance. Asking questions like, who's the fastest lender or who's the cheapest bridging lender? And then going direct or applying online. And on the surface, it feels efficient, quick answers, instant comparisons, and no conversations needed. But what we're seeing behind the scenes is very different. Deals are falling over, the wrong lenders being approached, exits not working, and ultimately investors taking more risk than they realise. In this episode, we're going to break down where AI can be useful and where it falls short, especially in bridging finance, and why speed and simplicity aren't always the same as the right solution. Let's jump right in. Mark, welcome back. How are you?
Yeah, very well. Yourself?
Yeah, good. Exciting again to talk about AI. Obviously, it's very much in the news, in chat, wherever you go, people talk about it. You know, it's going to take over the world, this, that, and the other. And obviously, we've spoken about it before, but just we thought it might be worth highlighting a couple of things that we've started seeing recently and kind of where that can cause problems, and just kind of highlighting some of the key aspects around when to think about it and when to use it and when it can work against you as well. So, we're just trying to help people stop themselves getting into a mess effectively. So kind of just to understand a bit about AI, why are investors turning to AI, in your opinion, at the moment?
Okay, so first and foremost, I think this, to be clear, this is not an anti-AI conversation. In fact, you wouldn't find a bigger advocate of AI than me right now. But I do think AI has its place currently. And I say the word currently because it's an evolving space and who knows what the next 18 months has got in store, right? There's stuff coming out all of the time in this space. But based on what we're seeing, I think people are turning to AI to try to shortcut a process, okay? What AI is particularly good at, and bear in mind, we're not using agentic AI or anything particularly clever. This is people just tapping questions into an AI model, like ChatGPT, for example, and effectively making it into a more enhanced Google research process. So I think what people are doing is able to fire questions at ChatGPT, for example, get some answers and then have a conversation then with a model to try and spit that out. What I think that does is accelerate the learning process. However, and this is a big however, there's always a caveat. The danger is you don't know what you don't know. And unless you are well versed in the subject matter, we all know that models can hallucinate, they can be confidently wrong, and you can be sent down a completely the wrong path and not know that you're on the wrong path until money starts changing hands and so on and so forth. So whilst I think it has its place and it's a useful tool, an over-dependence on it in a subject matter you are not particularly well versed in is quite a risk in my view. And as we know, with property is capital intense and it can get expensive very quickly if you make the wrong decisions. So that's what we're seeing at the moment.
Yeah, I think, part of, again, we, like I said, we're advocates of AI, so we're not pretending by any stretch to say that it's not a good tool. What it does, like you said, is being able to speed up the learning process and, the speed of information, the speed of a conversation that you can have, which is probably different to where it's evolved from before Google search and you've got a list and then you've got to go into websites and try and find information. It's the ability to have a conversation and try and learn more. That speed of learning really helps. And then, so I think people now seem to have this kind of reduce the need to speak to people. And that's an issue. So they may be trying to avoid sales conversations because they may not want to speak to a broker, for instance, in this example, because they don't want to engage in a sales conversation potentially where, they might, get some advice and then end up doing the deal, or maybe getting some advice and then feeling like they don't want to do the deal, or whatever it may be. Ultimately, speaking to a broker, we've talked a lot about before, is a form of triage in the first instance. And also it's that probably the perception of control by not having spoken to anybody. They feel like they're still in control of the process potentially. And then it's just trying to find, deeper research and get in a list of access. I mean, in this day and age, yes, you've got the high street lenders, but there's probably, how many lenders are there in the bridging space? A couple of hundred lenders?
Oh, and the rest, yeah, definitely.
And the rest, and those are the ones you could easily access. There's so many private funders out there. There's lenders out there you won't even find if you tried looking for them, because they just don't advertise and don't have a website, etc. So, and this is part of it, isn't it? We have lenders that we use that just don't advertise effectively. So, this is the part that, you won't find that. AI won't be able to spit that out for you anywhere. So it's those understanding that. So now that we kind of identified why investors are turning to this information, what is the problem with the responses that you get, I guess? What are the issues and the headaches that people are going to have by just relying on this as a single source?
Yeah, well, if you look at how people have, things have evolved with tech over time. You take your car insurance, for example, and you've got you go compare and your comparison websites out there. You set, you answer a series of questions and it goes and finds, well, there's a policy at the back of that, is a document that it probably reads and criteria based on what have you, and it's very prescriptive. Lending just isn't like that. Whilst you can, the sorts of questions that we're likely to see are going to be, who's the cheapest bridging lender? Because everybody wants to get the cheapest type of finance. Well, define cheap, define your deal and all of that sort of stuff. Who's the fastest? Who will give me the best value? All of the, who does the maximum LTV? Well, that's a very criteria-led search. Well, yeah, probably AI can do that. However, we're going to go into in a bit around why that isn't necessarily the best way to deal with it, because every deal is different and there are going to be nuances within everything. And we've spoken of examples in the past where a loan to value percentage of 85% is, the question is percentage of what loan, what value is it that you're lending against? Because there are issues with around the valuation process. So it's quite dangerous, and you could end up going to some lender that's never been heard of before, some boutique lender. Are they funded well enough? Are they actually got the money? Can they follow through on what they say they're going to do? There's a whole raft of other questions that need to be asked and understood with a lender, not just around their lending criteria.
So let's pick off one or two of these key questions that we probably get then. So for instance, someone might say, well, who's the fastest lender? Why is, if they're solely focused on who's the fastest lender, why is that a potential headache for somebody?
So bridging is sold on speed. Yeah. No matter who you speak to in the bridging environment, who's a lender, will tell you they're the fastest. Yeah, it's just standard. That's one of their pitches to get you to do business with them. They're all the fastest. However, it very much depends on the deal, right? So certain lenders can use AVMs, where it means you don't have to value it. Well, it has to sit within a certain set of criteria for that. You've got certain lenders that will do in-house legals versus outsourced legals. And again, it's got a certain set of criteria that will fit with that. It's also got to be a deal that they will like within certain parameters, and they know the area well, its geography. Again, all of this comes back to it. So we often see, and if you are doing research in bridging, you'll see, we completed a £3.5 million deal in 3 days. It's like, well, yes, but how did you manage to do that? The reality is probably they went to a different lender beforehand, so they had it valued. Yep, so they've got a valuation report in their hand now, albeit addressed to the wrong lender. They've probably done 95% of the legal work because they were midway going through a process with a different lender, and now they've jumped ship and gone to a lender who's going to finish for the last 10%. Well, when you've already got the valuation report and 95% of the legal work done, then getting it done in 3 days is plausible. So again, it's these sorts of things that we hear in the press that aren't actually quite as described and make it sound a lot better than it is. And these are the bits that AI can pick up on, because it will read the internet and feedback on, well, so-and-so did it in X days. Well, yes, but it won't know the context behind how that managed to happen.
Yeah, absolutely. Okay, so what about the other common question that we get probably is, who's the cheapest bridging lender then?
Again, we come back to comparison websites. If you go in and go find me the cheapest personal loan, it will find you the cheapest personal loan, but it'll be from 6.9% or whatever it is that's going to be out there. That price is usually their headline price, which is earmarked for their premium lenders, premium borrowers. Joe Public's going to get 1-2% higher, and so on and so forth. Plus, it's also subject to credit risk. So, again, when you go through the application process, they're going to assess you as an individual, and then they'll spit out your own personal borrowing rate, which is probably nowhere near the original rate. And that's just in personal loans, which is a regulated space. Non-regulated bridging loans are priced based on risk. It's as simple as that. So they will publish a rate. However, when they get the deal in, they know you as a borrower, they know your experience, lack of experience, what your personal assets and liabilities like. All of that picture then starts to be built up, and then they will price that loan accordingly. So just chasing the cheapest is a bit of a misnomer, because you probably won't end up with that price.
Yeah, absolutely. And I think, there's no such thing as the fastest lender or the cheapest lender. It's the most suitable lender for your deal and your particular set of circumstances. And that's the difficulty and again, the value from our perspective in speaking to a broker versus trying to get these answers. So yes, use AI to shortcut some of this stuff to learn, but then we believe that you still need to speak to people, whether that's us or another broker, to really get the value add element of who are particularly quick, who aren't particularly quick. You might see that there's certain phases that people are going through. Usually they're quite quick, but at the moment they're going through some changes, and you want to avoid them at the minute because they've got some issues with this and that, and some systems or internal problems that we are aware of that is very up to date, current, that you wouldn't find just on the internet effectively. So it's little things like that probably going to add the value at the top end of it. So what about, so again, probably understanding how we add value as part of this process. What would you say from a bridging finance? It's not a commodity. So where do we, what are the elements that we can add value? We're talking about adding value and the importance of using a broker. We've talked about that a lot. Why would you say that was the case?
So I think one of the fundamental questions that are missing when everybody wants to search speed, price, etc., is the question why? What are you actually trying to achieve here? So criteria aside, what is the outcome you're trying to chase? Okay, that isn't necessarily a conversation that you can have with AI. So digging down into what is an actual deal. So for example, if somebody's chasing for the cheapest loan, is it because the margin in the deal itself is so thin it can't afford anything more expensive? Well, we've covered this before. Is that actually even the deal? Now, we would probably challenge the borrower on whether this is a viable project to take forward and can it afford the cost and so on and so forth. Likewise, if somebody is chasing speed, why are you chasing speed? Is it because this is a rebridge of a bridge and it's your third time and you've got to do it before the lender forecloses on you? So again, it's getting the context as to why all of these things come in. So that conversation is invaluable in so much that just having a base understanding of what the objective is. And it may be that bridging isn't actually the answer. It could be a mortgage because you defaulted to bridging. Somebody's told you, you need to bridge that. And we've had a look and well, actually, do you know what? You could probably get away with a mortgage on this because of X, Y, and Z, and it fits into the mortgage profile. And we know that. So that's the value add from our perspective, is just going, right, let's pump the brakes a little bit. We're trying to find the solution. We haven't understood the problem. What's the problem? How can we fix it? And then we'll then understand what the challenges are, and we can overlay what's important to you, what you're chasing, your speed, your cost, and so on, and make sure that fits with a relevant lender going forward. That's an entirely different method to just going, who's the cheapest, who's the fastest, which is the biggest LTV.
Yeah. The other one I think that, again, never seen in any of this type of marketing was the exit. which is so important. There was an example. I spoke to somebody this week. He was looking to raise. He got some land. He's got planning permission for 5 houses, I think. They were going to be worth 750 to £1 million each on GDV on the end once he'd built them. And the question was around, okay, what's your exit? Oh, I'm gonna keep them. I'm gonna refinance them. That's fine, great. What's the plan with them? Oh, it's gonna be a HMO or maybe Airbnb, or one of those. Probably one of those. I'm like, well, which one is it? Because they're very different. Because you may get a HMO on them, but you need to make sure you've done them in the correct way. But you may not get Airbnb, or you might not have the demand in that location for it, and you might not get the lending based on the values that you need to in order to pay off the development finance loan. From a stress test, because they're expensive properties. We need to understand the different rents that they're going to get based on the property type. So there was having that conversation is not just as simple as I could do this, I could do that. Yes, you could, but we need to know more detail in that. And we like to start with the end in mind. How do you get it out of the loan and work backwards? And so, again, that's probably something they're not going to find, to be able to have those in-depth conversations, with an AI model.
Absolutely. And some other examples of that are, in fact, the client didn't go ahead. It'll become apparent why, but had the opportunity to purchase a 4-bed house, large, lovely house, Victorian, could convert it or adapt so it had 7 bedrooms instead of 4. And then we're going to let that out on a short-term let basis. So we're looking for a short-term let, sort of apart hotel type approach. However, they were still sharing a bathroom, or multiple bathrooms. They were still sharing a kitchen. So for all intents and purposes, it was a HMO, basically, is what it was being there. Hadn't considered the HMO licensing requirements and all the barriers to get you through that. So, had you borrowed the money to do that work, you'd have probably devalued the property in so much that it's no longer a house, because who wants a 7-bed house? And it probably wouldn't qualify for the HMO because there's also an Article 4 area as well. So you would have probably converted that property and been stuck because an investor couldn't buy it because it wouldn't have qualified as HMO. So you'd probably have to turn it back to what it was so that you could sell it as a family home again. And those are the conversations ultimately that we were having that meant this isn't a deal. So let's ignore the bridging and the pricing of the bridging, because you were going to create yourself a massive problem if you go and get some money, or you borrow from friends and family even, So we have people who turn away from bridging and will go, actually, I'll just go get an individual loan of friends and family. Well, they would have walked straight into quite a significant problem and then won't be able to pay that money back. So, there's definitely conversations that can't be had with AI currently that need to be considered.
Yeah, I think some of the things that we kind of, just trying to address, where can AI help? So, potentially it can explain products in a bit more detail if you want to just quick understanding of the different types of products, give generic advice, possibly list some lenders that they can find on the open market. What it's not going to be able to do, as we've kind of alluded to, is assess the real risks on your deal. It's not going to be able to predict the lender behavior on different cases and the way they underwrite them. They're not going to be able to manage valuations, navigate legal complications, structure the exits, intervene when things go wrong. So there's so many things that it's still limited in, but what we're saying is use it, but just be sensible with it. So, it can tell you what could work, but it won't tell you what will work.
Yeah. And so we see a lot of this now, and it's crept in, quite significantly, I think, into the way that clients communicate with us. Very often now we will get an email from a client asking us to go into the detail of a deal that's clearly been pulled together by ChatGPT. And, don't get me wrong, some of the questions are pertinent questions. However, if you don't fundamentally understand the deal yourself, you don't necessarily know whether those questions are the relevant questions to be asking. So it may sound very clever and it may present you in a particular fashion. It's blatant that it's AI. So my first thought is, does this person actually understand it? Because they've had to use an AI model to explain it to us. And secondly, some of the questions that get asked are not relevant to the overall transaction. And again, it sounds clever, Yeah, I've used words. I've seen pretty long words used in emails, and this is a first-time investor, and you're like, well, this is probably people I've worked with in the bank for 20 years don't speak like this still, and you won't find any more jargon than in the bank. I can assure you. So we do see that, and I think what that instantly does then is go, right, well, hang on, we need to take a step back. Does this person need proper hand-holding? Because if they're becoming that reliant on an AI model that it has to construct your emails for you as well, that'll be interesting. I'll just put it into Copilot and then respond, and it'll let the AI model speak to one another.
And that's the risk, isn't it? That is also a risk that we see potentially happening. And I know we've got an example to share with people, and whilst this hasn't come from necessarily from AI, it's an example where somebody has just kind of sourced a lender directly, through an auction. It was an auction purchase. They've had an opportunity to just go with a lender, haven't really shopped around or taken any advice, and have just gone direct to the lender. Do you want to just share a bit about that example?
Yeah, so it's an active case. I'll just talk about the high level and some of the issues that existed. So somebody's gone to auction. It's their first investment property. They've gone and won the auction. Looks like a lovely little deal. I think there was purchase price at something like 220,000. Spend 30 to 40,000 on it. It's going to be worth 350. So yeah, lovely, stacked up really nicely. I've gone through the legal pack or gone through the information. They've gone straight to the lender. So the auction house put them in touch with the lender. The lender's gone, yes, we'll do that straight away for you. I've run it through an AVM. So no valuer has gone to inspect the property. Instead, they have just run it through a computer-based valuation model, which has come back and endorsed the value that they need in order to proceed on the lending. They pushed it through into legals. Bear in mind, we've got 28 days to complete this purchase. So it's all moving at lightning fast speed. Got to the day of completion, and it came to light that the property was a leasehold flat, and that leasehold had 34 years left on it. So the lender just said, sorry, we can't continue, and just removed themselves from the process on completion day. So we're now in a position where we're trying to help the client obviously find a lender who can pick this up and try and get it done in the time frame we've got. So that's an example where it's been pushed through a process. Nobody's taken the time to fully understand the transaction, and something as fundamental as a 34-year lease remaining on the property. What that also means now is it's not just a 30 grand refurb, it's a 70 grand lease extension, and so on and so forth. So hence the reason they got it at auction for 220 in the first place, because of the challenges around it. So there's an example of somebody just going direct, not truly understanding the right questions to ask. You just don't know what you don't know. It's not criticism of the client. It just goes, it's demonstrating how it can actually end up going wrong with just oversight.
Yeah, no, absolutely. And, we don't want to, whilst we deal with these types of cases, we don't want to have to deal with them. We'd rather people just come to us in the first place to source it and secure it. And there's probably going to end up costing the client a fair bit in additional fees and, what have you. You want to avoid that, of course.
Yeah, so the consequence to this is going to be to extend the term past the 28 days. It's costing a couple of £1,000s. There was a few £100s in the application process because they used an AVM. If we can find a new lender, obviously they'll have to go back through the lending process. If they can't, and it's looking increasingly likely that we can't get it done in time because of the lease extension, etc., associated with it, is going to be that they will lose their 10%. So it's £22,000 plus time and stress. As you can imagine, this person hasn't slept for nights or days. Money aside, it's an horrific situation to find yourself in.
Yeah. Okay. So just to kind of move it on then in regards to, we've talked about what good advice looks like. It's being able to choose, from a broker perspective, we're looking to match the lender to the deal and not vice versa. We want to structure the exit right on day one. We can anticipate these problems like you just mentioned and kind of understand the case fully to make sure that, it fits. Manage lenders' expectations as well as clients' expectations, and then just coordinating the whole deal from start to finish. So I think it's not just about placing the loan, it's actually managing the outcome. And I think that's the bit that, from an AI perspective, it's not able to do. So I know we've covered that a little bit, but where does AI actually fit in? Then, like we mentioned earlier, education, it's great for education, initial research, understanding different terminology, and then maybe just exploring different scenarios and things like that. But it should support decisions and not replace it. I think that's the key thing from our perspective.
Yeah, and look, you can use so AI from a chat perspective. I absolutely agree, but AI can be used in many other places within this process, right? So deal sourcing can potentially involve an element of AI. I wouldn't give it its entire job, but it can certainly help scraping websites and whatnot. So you can do that. If you're not particularly strong on Excel, AI now sits in Excel. So if you want to do certain formulas to work out affordabilities and create your own models to test financial understanding, though that AI sits really nicely in that process as well. And there are some pieces of software out there that can help you just semi-automate a process. So it just takes some of the repetitive tasks out of the process for you and frees up your time to do the analysis and the education and the learning and so on. So it absolutely has its place in this environment. Just be careful where you use it and how much dependency you put on it as well. I probably wouldn't be putting 100% of my dependency on it. Just use it as a tool to accelerate what you're already doing.
Yeah, absolutely. And I think from our perspective, is the best investors, they don't look for the fastest or the cheapest deal. They look for the safest path through to get the property and get the deal over the line, rather than specifically the fastest or the cheapest, because you want certainty rather than, is this going to happen? And, so taking things for face value. Okay, so I guess just to close then on this, AI is changing how investors access information, which is a good thing. When it comes to bridging finance, deals are complex, outcomes matter. And if you rely sort of purely on the responses that you get, then you potentially increasing your risk rather than reducing it, and that's a concern, and that's why we did this episode, to try and highlight that. So we're not trying to remove advice, we're just making sure that you're using the advice in the right way and the guidance that it provides. So if you're looking if you are looking at a bridging deal and that you'd like to discuss, then make sure it's structured from day one up front. Speak to us, have the conversations early, because in this space, obviously getting it right up front is absolutely everything. So thanks for listening. Thanks for your time, Mark, as always. And we'll see you on the next episode.
Yeah, thank you very much. Take care.
Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.